In Investing 101 today, we have with us right now top trader Phil Flynn, who's a Fox Business Network contributor. And Phil, you are a big time trader, but you also have to do a lot of investing, and you've been around and you've seen some of these fool's gold traps that are out there. So what is your recommendation? What would you say?
I would say that one of the things that I would be worried about is to be too fearful about when you invest to lose money, because sometimes when you get that guaranteed return, it's not as guaranteed as you think it is. For example, when we were kids, when our relatives decided to give us like a double E bond, hey, in 30 years, you're going to get this amount of money, just for this small investment. We didn't realize at the time, and especially if you do it today, that you're actually losing money. You would be better off putting your money in your mattress than you would be in investing in a government bond. Why is that? Because the amount that you get back from the bond is less than the rate of inflation by far. Like a double E bond, you get less than 1% interest, and over 30 years, it doesn't accumulate. Over a 30-year time period or even a 5-year time period, you're losing money because the rate of inflation is like 1.6% right now. And more than likely, it's going to go higher. So if you think inflation is going to go up, you're actually losing money by doing that bond. So what you want to do is perhaps change the dynamic just a little bit. And instead of giving your nephew or your child a bond, you might be better off giving them one share of a good, healthy stock that pays a dividend. For example, Pepsi pays about a 3% dividend. It's still a very safe stock. It's paid a dividend since 1965. And even though you have risk, on the stock price, if you're going to hang on to it for a long time, the dividend more than makes up for the risk of the share of the stock.
What about investing in commodities? Because that's something that can become very risky.
Yeah, commodities is generally very high risk and highly leveraged. And, for the average investor, it's something that you shouldn't directly do, unless you have a lot of money and you can afford to lose it. I always tell you, if you want to get invested in commodity, make sure you can afford to lose. It's the only way you're going to win, because you have to take substantial risk. But there are ways for the average investor to get some exposure to commodities and not have as much risk. There's a multitude of ETFs that you can buy, or you can actually go out and buy an actual bushel of corn. Just kidding, you probably don't want to do that. But you can actually buy some ETFs, for example, that have exposure to the commodities, and it gives you limited risk. You can only lose what you put into it then, and that would be a good way to go.
Well, always good to go with you on our show. Thanks so much, Phil, for helping us out today with Investing 101.
Thank you. Have a good one.
This is First AM. Check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.